Hello and welcome to Tuesday the 21st FTSE100 market review. We had a day off yesterday. We don't recommend really trading when either the UK is on bank holiday, because it's obviously not a real market, or when the United States is off on a holiday, because you don't get the volume, levels don't get respected, and if you get a big order in the FTSE or the DAX, then that can skew the movement. So we like to see everyone in. I mean, most pros, if you're a professional and you had an option of a day off, what would you do? So you'd have a day off. So we don't trade bank holidays. So we're back this morning as usual, nice and early, and we were basically calling. I mean, there's no times on this chart, so do forgive me, I zoomed in a bit, but this was all pre-open, and we were posted on Twitter, and we posted to people that follow us on Twitter, on the public Twitter, and in our room, that we were looking for a test down at 20. We look to to trade market reversals pre-open, but we didn't get that on the open, so there was not a lot we could do. But we were told, everybody that we knew, if it gets to 20, you need to go long. And we got a few emails after the fact. I mean, you can see what happened at 20, and we put an order in here and we sold here, done for the day, no problems. That's what we're like, 20 minutes. Then we got a few emails saying, why have you done that? Why have you done that? Well, the reason why we've done that is because just look back at the charts for the last few weeks. Look at the levels. 20's been the high of the year. So it breaks. We all know, well, everyone should know, sorry. That's been resistance. So what does resistance become? It becomes support. And the first time it tests it, the more likely it is, the higher percentages like to break off. And pros know this. I mean, everyone that knew what they were doing were long here, which is why you just get this candle goes down, doesn't even bother breaking 20. And don't forget, we got in at 21 because we didn't want to miss it, but you can't be to a pip. So you need to be plus or minus a couple of pips either side of these levels, because we all use different platforms and they all have different executions. And the one guy I was chatting to was his price didn't go below 29, which was most bizarre. But anyway, so we bang this, and you just bang it. I mean, again, we've had a few emails today, and I might do a second email tonight, or I might do it tomorrow, about what we do and why we do. And people don't understand, and fair enough. I can't expect people to understand, so I'm not going to try and explain everything that we do. That'd be unfair. This is a market overview. This is not a training course that we offer, and we offer free ones and paid for ones. So we're not going to tell you everything, because we'll be here for 6 hours or 8 hours, as our training is. But anyway, the price comes down. You just say someone emailed me today saying, when do you know to go long? Well, you just go long at this level, because this level has been the high of the year. It's bounced off it. How many times last week? Look at your charts. Comes up, bounced off. Comes up, bounced off. Comes up, bounced off. Comes down. What's it going to do? End of story. Okay, comes down. Obviously, the more times it hits this level, the more times you've got to be careful. But again, this price action here, what's it showing you? It does not want to go below her. It's come down, teased, and gone, well, who wants to sell me down here? Nobody. So what happens? The more times it stays at these levels, the more likely it's to go up. Alright, it's only a few pips, but again, if you follow what we do, then you'll understand why you only need this move, and you're done for the day. Anyway, price comes down, bounces off, comes down, bounces off, comes up, bounces off. I mean, you can't trade up here because you've no idea. The market's not set new highs and held them. Although we identify 50, we always like to use the 50. And I can't remember what the overnight number was, 70 maybe, but that's out of hours. We all know there's not a lot stopping the market between 50, 70 and 00, and we wouldn't be surprised to see 6,000 tested at some point, especially the more times it doesn't want to break into this, this area here. Below here was where we've been for the last 2 weeks. It's as simple as that. It doesn't get much simpler. So we always use a simple approach. I know some people think we're crazy sometimes because we're just too simple, and it can't be that simple. Well, yes, it is actually. And the people we've been helping for 3 or 4 months now will back us up 100%. So you just need to be aware of this. You just need to be more careful. The more, especially this candle here. A few people in our room took this, and I was like, had my eyes closed at one point. But as long as they all know that if it breaks these levels, mean, if you draw a line across here, you'll find it's, you know, again within a pip or two, you know, it's a fairly straight line. So if it breaks, I mean, most people have to stop at 5 pips, which is fine. But as long as they get the stop get hit, there's not a problem. Because the market's showing you it does not want to go below, does not want to go below, does not want to go below. But the more times we use an analogy again that probably most of you have seen on the videos that I listened to on the videos, sorry. The more times it bangs on a door, the more like it's like to burst when it breaks. So this was a bit, I mean, I'd taken any of these, I couldn't fault anybody for taking these and then building the position up and getting up, you know, at, you know, our target pips. You know, you could even take add and then get out for full position up here. There's nothing wrong in that. But this candle here was on US Open was a bit strong. Even I was a bit surprised that it held. But you think about it, you've got all this push down. You've got loads of people pushing. What happens? Can't get through the door. What happens? The harder it pushes down, the more likely it's to reverse. That's why you get this spike up to here. I quite expected 50 and then 70 to be tested this afternoon, but we didn't get that. Then it was chop around after that. And tonight, as I've been putting this together, we've dropped below these levels, but it's out of hours. You know, and we all know different brokers quote different prices out of hours, so it's not a real breakout. But as I say, we're now down at 11 on capital spreads, which is what this chart is. Well, it's time to trade, but it's one that capital spreads use. But you know, it's out of hours, so you can't really judge that as a proper break. You know, if you're looking at levels, you really got to use cash hours, which is 8 till 4:30. So I hope that shows what, you know, what's and all as usual. What we've done for the day, we made our money as usual. Lots of people in the room made the money. In fact, I think nearly everybody made decent money today. So you know, you don't need massive moves to make decent money. But again, we don't expect you to you know, to understand that fully unless at least attend our free part 1 training, which is, you know, we're not here to sell you anything, so it's entirely up to you. Okay, thanks very much. And as usual, you know, if you got you want to have a look at the website, I know we post these videos on there, but if you go back in the past, we've got lots of other videos like training the train, how to day trade like a pilot, you know, how to help people and stuff like that. Or on Twitter at FTSE Day. Well, if you've got any questions, and as most, we've had quite a few in the last week or so, and we've answered nearly everyone, I think. Just send us an email. But most important, trade safe. And I'll catch you tomorrow. Thank you very much.